Thanks for tuning into Stocks with Antonio. I see a lot of reels, a lot of on YouTube when it comes to investing. A lot of people are encouraging it, and they're saying, "Hey, invest because inflation is going to eat up your money." And I'm not saying not to invest. Obviously, this is a financial channel, and I believe in investing. I think investing is important. But my point that I'm trying to get to is whatever amount of money someone has, right? If it's $1,000, if it's 10,000, 100,000, whatever it is, right? If you invest it incorrectly, if you make it into a bad investment, you don't have to worry about inflation. You don't have to worry about inflation eating up your money, because what will eat up your money quicker is a bad investment. Meaning, if you got cash and it's just sitting in a savings account, if it's under your mattress, that would be better than a bad investment. I wanted to put that out there because a lot of people just tell you to invest. They don't exactly always tell you what to invest. And some of the investments they recommend are extremely risky and it's not really the best advice. So I do believe in investing. I am an investor. There obviously are better places to save your money than under your mattress or just a savings account. There's high yield savings that you can take advantage of, and you don't have any risk. So there's places better to put your money with no risk. But remember that when you are making an investment, okay, if it's a bad investment, you're running the risk of losing all the money that you put up for that investment or quite a bit. So it's very important before you make an investment, you do some research, you do some of your homework, and also look at your circumstances when it comes to your day to day, because that's going to vary with everyone. Some of you that are watching this may have a family, may have a 9 to 5, may have two jobs, and you may not have that much time to pay attention to the stock market, or you're learning but you don't have as much time to dedicate to learning as to someone that may have less responsibility. So everyone's situation is going to be different, and hopefully when you do invest, or if you are investing, you're buying good companies, you're buying good assets if you're investing in the stock market, and hopefully your money will grow over time. Now, a lot of individuals right now with the war and a lot of uncertainty, and 2026 has been, an up and down year and a lot of things going on, that some people are sitting on the sidelines and they're waiting to get some type of confirmation that the market's going to start to move up. What I will say, from 2025, the market has pulled back. Okay. And some companies in the pullback have become attractive, and some companies are still overpriced. So when you're looking to invest, you want to look at that. Even though the market's pulling back and has pulled back, doesn't mean everything is at a great price. Some companies are still not at a great price to enter. Okay, and you can use Google for this. You can use AI. You can look at what will be a good price per earnings to enter and what it's currently at, and Google will just shoot it out for you. It's not even that difficult. So you can find out within a few seconds, a few minutes, with minimal effort. I'm going to share with you um a stock that I really like, that I think is a good opportunity, and I'm also going to share some things because a lot of people are nervous to enter into the stock market or to invest some money with how things are going. A lot of times when you got some money and you're like, okay, I'm ready to invest, you want to look for companies that you believe are going to be around, right? Especially if you're newer and you don't have a lot of experience, you want to look for companies that are going to be around. And what will be safer is long-term investing, meaning if you are going to put money in the market right now in 2026, you're not planning to sell that asset in the short term. That's why it would be more important to make sure it's a good asset. Now, I'm going to share with you which ones I like, but anything I share with you is not a suggestion for you buy, hold, or sell. It's just me sharing a company that I like, that I'm buying in, that I'm buying into, and that I'm holding in my portfolio. Now, before I get into it, I'm going to share a recent story, and this one is with Netflix. I bought Netflix after a split when the company was pulling back under $100 a share, because it was going to buy Warner Brothers. Investors were scared, and it's not the first time Netflix has been in a situation where investors panicked and it was pulling back. I believe in Netflix. I use Netflix. I have Netflix. I know a lot of individuals that have it. And when they have their earnings, their numbers have been good. They've been historically, when their earnings come out, it's a strong company. So I felt that when a lot of people were panicking because of the Warner Brothers deal, I was just watching it. And I felt that it was going to, no matter what direction, if it was able to acquire Warner Brothers or if the deal didn't go through, that eventually the stock price will go up. I just needed to get an entry point. So I decided to get in it under $90 a share. So I started to buy Netflix under $90. I got in, right? Now, guess what happened? It started to go down even further. Okay, it went under 80. Now, a lot of people would have panicked and probably sold. But remember, I'm buying it because I believe in the company and I'm planning to hold it for the next 10 years. So I'm not worried that the price continued to go down. What I did when it dropped under 80, I still believed in the company, still believe it was a strong company. It was just getting at a lower price, meaning a more attractive price. So what I did, I bought more and brought down my cost average. So I bought some more under $80 in today, making this video money. If you look at it, I believe they closed around $98 a share. And in the morning when the market opened around 9:30 or before the market opened, I think it was over $100, right? Now, I wouldn't have been able to take benefit off the shares going up if I would have never entered. And what I'm trying to say is, I believe, in my opinion, I could be wrong. I believe this market wants to go higher, right? Because even though we've pulled back from 2025, the market's recently been moving up. Now, we do have this is an important week. We're going to have a lot of data coming at us this week, and it's going to impact the stock market either in a positive or negative, right? Tomorrow there's a deadline, I believe at 8 o'clock. So we have a lot still going on, but I believe the market has been coming up a little bit. If we get some good news tomorrow, bro, the market's going to continue to go high. Now, if we get some bad news, it could pull back. But for long-term investors, if you're looking to buy and hold for the next 5, 10 years or longer, if there's a pullback, it's just an opportunity to get good assets at a discount. But remember, not all companies that pull back are going to be at a great price. You're going to have to do some basic research. And remember, I said you can use Google, you can use AI to come up, to figure out whatever company you're going to invest in if it's a good price at the time. Now, the stock that I really like is Meta. Meta's been coming down a lot. I believe in Meta. I know they have a lawsuit going on and people are scared. Meta, in my opinion, is going to recover from all this and eventually will be $1,000 stock. Now, it's not going to happen overnight, but you got to find a place where to enter. And if it does for some reason pull back, you dollar cost average. At least that's what I'm doing, right? And I wanted to share this with you, just what I was talking about. I'm going to do it myself and I'm going to share it with you, right? So you can go ahead, go on Google, and you can see as early as April 2026, the current price to earnings, which is the PE ratio for Meta, is approximately between 23.9 to 24. Okay. With the stock around 574 per share. That's currently roughly where it's at. I believe after hours right now, it's gone down a little bit more. So that means if it goes down, the price per earnings will just go lower. And it says here, okay, here I got it pulled up. Sorry for that pause there. But as early as 2000, a good price per earnings for Meta appears to be in the low to mid 20s, which is currently there. So right now, you can get Meta pretty much in the low 20s. And that's around 574, meaning if Tuesday we get negative news, we get more negative news about the lawsuit with Meta and everything, which I believe they lost. That if that price comes lower, your price per earnings will be more attractive. And when you're buying a company, you want to get into an attractive price per earnings. Now, you don't want to just go based on that, but the reason I believe Meta will go higher is because Meta's a ginormous company. Their earnings have been killing it. I know people are concerned with the lawsuit. I know people are concerned with the CEO, with the spending with the AI infrastructure that he's spending so much money, and people are worried with future earnings. And all you have to do is pay attention to the future earnings, But if you really believe Meta is gonna, uh, go away, and you have a right to that, but I don't think so. I think Meta's going to prove to us that the spending that it's doing into investing into the AI infrastructure for the future is going to pay out. This lawsuit thing, I think, is going to blow over, and like I said, it's going to be $1,000 stock. So if I can start getting in the 500s, if it pulls back, I can get lower, I can get an attractive price per earnings. I believe I'm investing in a good asset that's going to go up in value over time. But remember, you got to be patient with it. But I think Meta is going to be a winner. And when you're looking at the stock market, that's what you want to look for companies that have a proven track record, that you believe strongly they're going to be around in the future. If you're investing in moments like this into small caps that are not profitable, that haven't had strong earnings and things like that, you're taking extremely big risk. And then what can happen with those investments, they may not pay off. And then that money that you put into it will probably disappear. You'll take a big loss, and that means that your money would have been better under your mattress than taking that investment. So if you want to play it safer, okay, I would invest in big boy companies like the Mag 7. I would invest in a good ETFs that tracks the S&P 500. And then if you have some money that you're okay putting at a greater risk, you can look at some small cap companies. But if you're going to invest in a small cap company, which I do, I invest in small cap companies. One of my favorite ones is Serve Robotics, ticker symbol SERV, which I've talked about a lot in previous videos. And I've been buying that one under $10 in the nines. And guess what? It's under nine, it's in the eights. And I've been saying I think that's a good price, but it's gone down from where I bought it and I haven't sold. I believe when this market starts to recover, Serve Robotics will recover with it. And the reason is when they come out with their earnings, they've shown growth. Okay, they have more robots out than they did before. Their revenue has continued to increase, right? They've also continued to get new partnerships, which is going to help them continue to grow. And that's why I believe in this small cap. It's not because I just think, oh, it's going to go up and it's based on nothing. No, I look at their earnings. I'm seeing growth. I'm seeing their numbers of the robots that they have delivering food growing. I see them growing into new cities. So those are the things that make me believe that Serve Robotics has an opportunity that will continue to grow, eventually become profitable, and be a stock that will be over $10 a share. So I'm investing now, being patient, and when the market starts to turn around, which could be soon or it could be next year or further down, I'm already creating my position. I've been building my position so I could take advantage when this market turns around. But some opportunities that I'm seeing right now is Meta. Serve is one that's a small cap, that's a greater risk, but I believe in, and I've been putting money into that one. Even if you do invest though in the bigger stocks like Meta, some of the companies in the Mag 7, you always run a risk. Another one that I've talked a lot about is Amazon. I think Amazon's a great opportunity. That stock unfortunately, hasn't been moving too much. It's been kind of staying around the 200s, but I believe within a few years, I believe Amazon next year, or, depending when this market starts to recover, Amazon eventually will kick off. We'll be over a $300 stock. So if you can get it right now in the low 200s, under 200, great position to enter and start building your foundation into these great companies. Because remember, what you want to do is you want to get an entry and then you want to start building your shares into these companies that you believe in. That way, in the long term, you build wealth, but you got to have patience. Now, if you're planning to get into the stock market, make fast money by doing options, by doing calls. By doing puts and calls, doing options, right? You can really lose a lot of money. You can lose all your money. Those are very risky plays. So when you see a lot of advertisements how you can make a lot of money really quickly, yeah, it's true. Doing puts, doing calls, you can make a lot of money, but you can also lose it all. And it's not that easy. For that, you really got to start learning the charts. You got to start learning the candles. You got to look at the RSI. You got to look at the volume. It's not that easy. A lot of people on the internet, they're marketing stuff to sell you a course, to sell you a program. And what I'm here to do is to share my opinions with you, be honest with you, and hopefully you can have success in the stock market long term. And if you choose to do the short term, then take time every night or when you can to learn the charts, to learn the candles, to learn the RSI, to learn the volume, to learn the 9 EMA, the 20 EMA. There's a lot of stuff, and you got to learn it and then figure out what works for you. So before just jumping in and throwing your your hard-earned money into the market, into options and stuff like that, focus on building a base, focus on investing in good assets. Sorry, getting your money to grow. And while you're doing that, spend time learning the charts and stuff. So when you do decide to start making money within the same day or shorter term, you're setting up yourself to have success. Hopefully, you found the video helpful. If you did, do me a huge favor, smash the like button. Check out the description box. I got some useful links there for you. And if you haven't done so, show me some love by subscribing to the channel. If you want to stay tuned, knowing what stocks I'm buying, what I think is going to happen in this market, got to subscribe to the channel and hit that notification button. Thanks for watching, and I'll see you on the next one.